All right, good evening and welcome back to another session of the live analysis. This is your host Harsh on behalf of GTCFX. A warm welcome once again, and thank you, Romal, for taking time to join. Thank you, Shuklaji. Thank you, Brother Mohammed. Once again, a warm welcome to all of you, and also humble thanks to all participants who are joining us live on YouTube. Thank you again for taking your valuable time and making this happen. We are meeting 4 times a week: Tuesday, Wednesday, Thursday, and Friday. Tuesday and Friday for English theory and live sessions, Wednesday and Thursday for Hindi theory and live sessions. And once again, thank you very much. And let's get started straight away without wasting your time. We've got about 5 to 6, at least 4 high potential trade setups to discuss today. And without wasting a moment, let's start. Let me read out the risk disclaimer first. Okay, over the counter and margin derivative contracts, including CFDs and spot foreign exchange, are complex instruments. They come with a high risk of losing money due to the extensive leverage they offer. You should always consider whether you understand how these products work and whether you would afford to take that high amount of risk of losing money. It is highly advisable to take independent professional advice before any kind of investment or trading. As always, these sessions they serve only an educational purpose and will not include any financial recommendation or advice whatsoever. It could be potential trade directions only. It could be taken as an educational advice. Thank you very much. And let's get started with the wave counts. As always, with the Euro USD chart setup, I'm I'm not using the MT5 platform because the technical Elliott wave counts tools are not available, and if we use a text box, it takes around 40 minutes to complete one analysis. So I hope that all the participants who are joining, they are quite familiar with the TradingView platform. If you can acknowledge, please, it would be helpful. Shuklaji, Mohammadji, Romal, I hope you are comfortable with the TradingView platform. You can it's a freely available platform. You can just log into tradingview.com and open up a free account there for analysis purpose. Specifically, if you are interested in the Elliott wave counts and the other tools available, that you could use this platform. All right, let's get started now. I hope you are able to see the chart clearly, gentlemen, and also the audio. And for those ladies and gents who are joining live on YouTube, if you do have any questions or anything to comment on, please feel free to type in there. I do have a habit of toggling the screens. We'll take your questions during the sessions mostly. If not possible, I will answer them definitely after the session in the chat reply in your comment section. Thank you very much. Okay, Shuklaji, good evening. Thank you, Romalji. Thank you for confirming that is clear. It will take a few more seconds to complete the counts. The theory sessions are going to include the logic behind why we are doing what we are doing. I mean the English ones, which we are meeting every Tuesday, 4 p.m. Dubai time. The next session there on Tuesday is sideways, but then next Tuesday onwards we start Elliott waves there. So you might want to join Romal if you're interested. Okay, so we've got 5 waves up. followed by three waves down. That is an impulse followed by a correction, and that correction has been neatly supported at the Fibonacci 61.8%. With that news, it is quite clear and prominently evident that the next move in euro could be equal in magnitude on the north side, equal in magnitude of the previous wave. All right, so it could be potentially around 1500 pips from the low, which was print on 13th of January. So potential high potential trade setup. The action is found on the hourly chart. Let's go there. The minute degree impulse, a minute degree impulse is clear. I'm going to quickly plot that. And it's also followed by a corrective. I'm going to change the degree in a while, please. That is the minute impulse followed by a minute correction. All right, and the Fibonacci retracement, which was taken right around the 3rd of February, right after the announcement from the US President on the trade tariff wars, that cap down open was supported well at the 88% Fibonacci ratio. And that's why the counts of Elliott wave counting is one of the most objective theory of analysis these days, and it is uh, it is highly recommended for trading with the kind of objective in your mind. Now, what we see on the right hand side is again a simple replica of minute degree waves being carved at several levels. It is wave 1 and 2, and again wave 1 and 2, and the third wave is going on. So we don't want to get into too much of lower degree wave counts here, but the point we are trying to make here is that the larger degree trend is up. Also, the minute degree trend is now firmly potentially on the right, on the long side now, on the north side. All right. And the Fibonacci extensions, if you were with me the previous live session, also yesterday, we did the analysis for euro and gold, and euro has almost traveled up 90 pips from that point. Now, if you were wanting to trade or take any position right now, then potential high probable trade setup is now coming up on your screens. But before that, let me make clear about the risk or the stop loss. Now that is a major support, 1.02. So we propose a potential stop just around that corner. Ideally, it should go around 1.0150. And the upside target, we are trading around the 450-60 range. We still have got 300 points to travel potentially from this point as we speak. Uh, but what we recommend is not to buy completely over here. Maybe you can get in partially. Give it some more room to add on a corrective decline towards 350 zone. All right. So here's the first trade for the session coming up on your screens. Potential buy for Euro USD. We recommend partial buy. It is if a person would want to invest or trade, it would be good to partial long around 1.0450. It's around 60 right now, so let's keep it that way. Remaining can have a limit orange around the 1.0350. It could be a range 1.03 3060 kind of a range. Ideally, stop loss would go at 1.0150. Nothing above 1.0250, please. It would be technically incorrect in that case. And you might want to note the targets around 1.0750, 1.1100, and so on. All right. Okay, so that's the first trade analysis for euro flashing up on your screens. We have we've just been joined by one of our friends, BH. Welcome again. And just to let you know, we have just started 5 minutes back, and we have analyzed the Euro USD chart with the potential trade setup on your screens here. All right, let's move on to the dollar index now. Bringing up the daily chart first. So that's an impulse lower, exactly opposite to what Euro has done. And the degree is minor. Since we are on the daily chart, it's a higher degree, which is being followed meticulously by an ABC corrective rally. It has taken a couple of years to materialize, and not only a couple of years, but it's rallied in a very complex format. Especially wave B was a very complex format called a combination. Wave B is here, so that's the W, X, and Y. It's a combination. Very tricky to identify and trade combinations actually. September 2024 was a tricky month for traders, especially around the euros and the dollar index. But all right, that's the past story. Let's come back to the current one. 13th of Jan is the print 110 point. It's 109 here because the provider is capital.com. If the provider, I normally analyze on the provider 8 cap. So that was a high registered at 110.19. But there is some price discrepancies if you change your providers. Here it is around 110. So we are going to have a stop recommendation right around 110 mark if you are trading with this provider capital. All right, and the action is now lying on the hourly chart. We'll find out a trade there. Once again, the Elliott wave minute degree counts are quite clear on the hourly. So we've got the first impulse, not only the first impulse, but a corrective wave also complete. Let me just change the degree to minute. All right, that's the corrective wave of the similar degree. It went up to the 88% just as the dollar euro USD, right around the 88% on 3rd of February after the announcement of the trade wars or tariff wars. And what we see right now on the right hand side is again a version of a corrective ABC at least. Now that C wave has fallen a bit short, but that's fine. It's not always that they hit the Fibonacci targets all the time. We were expecting 105.60. Yesterday, if you were there, we've already gained we went short around 107.10 with a potential target of 106.30 and 105.60. So first target has been met, the second is not yet. There is a quite good possibility that in the New York Open, it might print another low. But for those who are wanting to trade fresh, the recommendations are as follows. The potential direction firmly remains on the south side. So anything that you keep selling on rallies is going to yield, probably going to yield a profit for the dollar index. And if you're going to go long in the euro USD, that's probably going to yield in profits in the euro as well. Welcome, Mr. Chocho. I think you were there in the last session as well. Welcome back. We are analyzing the second instrument, that is dollar index, on the screens right now. So the trade recommendation for the dollar index is now flashing up on your screens. Before that, let me find out the targets. We use the Fibonacci extensions, go back on a 4-hour time frame. So the risk which we are proposing, and the chart is clearly indicating that the stop loss should ideally go around 110, and the targets are now 104.50 and 101.50. But we are not inclined to completely take positions at around this price. Okay, we want to give some room for a corrective rally. Probably that rally could materialize sometime during the next week or so, around 108. So we go partial short right now, 106.40, and remaining around 108, the potential target of 104.50 and 101. All right, so here's the second high potential trade for the day. It's a partial sell recommendation around 106.40 right now, and remaining around 107.90, 108. The recommended stop goes to 110, and the price targets are 104.50 and 101. In fact, it's not even 101. It is, let me get back to the daily chart, please. The wave theory, the Elliott wave counts actually suggest that the magnitude of drop of the first wave would be equal to the magnitude of drop of the third wave or the C wave. So we are either into the third wave or the C wave, and it's actually projecting towards 97 at least. That magnitude and this magnitude would be almost equal. At least 97, possibly 95, 93 as well. So a potential 10% correction could be seen, 10% plus correction could be seen in the dollar index, and exactly on the opposite side for the euro. Mind you, gentlemen, this is not a short-term projection. Short-term projections for dollar index are as follows: 104, 104.50, 103, 102. Those supports are going to be taken out one by one. So you can keep booking partial profits if you're willing to take short-term trades. But please remember, keep always some position on active on the short side. You never know if there is a pressure. I think next week would be a wonderful opportunity to go to add further shorts, and that would be a March should be quite inclined on the lower side. All right. So that is the second trade for the day. Let's go back to the to gold. I've prepared some counts here in details so that the time is not being wasted, and the Elliott wave counts are described in quite detailed view here. That is the gold daily chart I've mentioned here. And let me take a moment to explain what's going on in gold. I'll take a pointer. So what we are seeing in gold is as follows. The story begins from October 2022, September, October 2022, and that was wave 4 termination of primary degree. Sorry, minor wave. It was a minor intermediate wave 4, and intermediate wave 5 is progressing. And within the intermediate wave 5, we have got wave 1. You see that letter wave 1, wave 2, all right. Wave 3 was expanded. I have also done the subdivisions of waves. That's the three different degrees of Elliott wave counts. One is the minute, the second one is the minute, and the third one is also, I've also shown the sub-minute degree here. So the third wave was quite extended right from uh, 1800 levels. It went up to 2,800, 1,000 points of rally, a neat rally, wave 3. We were quite impressively long during this phase. Now, time and again, we have discussed the alternate count. When second wave is a sharp one, which is right now, wave 4 normally tend to take a complex shape. Now, the only proposed complex shape for wave 2 as of now, as we speak, is of an expanded flat. Expanded flat is a corrective wave where it's a three-wave corrective decline labeled as minute A, B, C in circle, where we've got minute A in place. Minute wave B is just around the corner. Two Now let's see if it is wanting to, if it's stalling or if it's producing a pattern here. We are still not having a confirmed pattern, but we are fancying a wave B potential top in place or just around the corner. And if that is correctly identified, we should be going ideally in a 5-wave lower towards the C wave around the 2500 zone. The Fibonacci ratio is showing a 2400, but I would say even if it goes to 2500, we would be more than convinced that technically the pattern is complete. All right, so that's the overall structure. Alternate count suggests if we are wrong in pointing that okay, the wave 4 is if we are wrong in projecting the wave 4, and if wave 4 is already in place somewhere here, then prices are already within the fifth wave rally, and it could give a slight corrective drop and then proceed towards the 3300 levels. Here's the target for gold over the long term. So bullish scenario for gold is absolutely possible, and we have no doubt in it towards 3100. With the hypothetical wave 4 here, actually I should have done wave 4 there, which is showing 3300 wave 5, all right? In that case, the corrective decline will be very shallow. But some kind of correction is very much possible from the current level. High probability remains for that. All right. So keeping this larger degree view in picture, let's now go back on the hourly chart where all the action is there. And this is where all the action is there. Let me bring up what is the story in the hourly. Here we can see a proposed ending diagonal into picture, ending diagonal into play. Sorry. If I connect the dots here of the diagonal structure, that is the first one, and here's the second option. It looks a very sharp diagonal. If we are wrong in this, identifying this triangle, that could be wave 4. Let me also label the diagonal. All right, here's a proposed diagonal. It's a 5-wave structure, and each wave is subdivided into 3 waves. Now, if we are wrong, there is a possibility of wave 4 coming here, and then we might have one more leg, okay? But probabilities are quite high that we have confirmed because we have seen a break of price. Day before yesterday, when we were in the live session here, I think it was Wednesday Hindi live session. So during those times, we had discussed that if a major top is in place, the first step should be a break below 2919, which we have already gotten here. So ideally, if we start plotting on the right hand side, then we've got wave 1 lower, we've got wave 2, and the third wave is extending. So somewhere 3, 4, and 5 should be materializing. And if we go by the path, be something like this. Wave 3, 4, and 5, which kind of takes that particular support. When prices reverse from an ending diagonal, they come back to the diagonal starting point. Sorry, this is the starting point. So it is 2865 on the charts with the support resistance theory. And if we do the Fibonacci extensions, again, it is almost around the 2874.75. All right. Now, bottom line objectivity is that for this scenario to hold, prices should be below 2949. All right. So with that objectivity in mind, the stop loss can be kept at 2950, or if you are okay with it, just keep it above the high. All right. And targeting 2905 and 2875. That is the proposed high potential trade setup in gold. And this is a slight aggressive. So I'm saying aggressive. The type is aggressive potential sell in gold. Uh, we can go around 29.33. It can go towards 38 as well. So that's the range we should be ideally positioning ourselves on the short side. The recommended stop, it's okay to keep it around 2950. I would go and keep just about 2955 or 57, just a couple of points. I mean, if we can get pipped off if it tests the high around 61, 62, but that would be yet another opportunity. But we don't want to speculate on that high right now. And the target potential, the first has been met, which was projected on Wednesday. Now it comes to 2905 and 2875. All right. So that is the high not the high probable, but a bit aggressive side potential trade setup for gold. An alternate count is if wave 4 is terminating here, then there will be a wave 5 pushing through 29, 62, 63 to complete the diagonal structure. So that we will review again when we come back on the live session on Wednesday next. But this is what the story in gold reflects at this point in time. All right. Now let's pick up the fourth story of the day, and this one is also a high potential trade setup. So we've got Euro USD high probable, dollar index very high probable, and the pound another high probable trade setup up on your screens now. We look at the daily chart, please. What we've seen in the past 2.5 years easy is an impulse, followed by a corrective decline. It's a complex one. It's not a simple ABC, but just for the simplicity's sake, I'm plotting an ABC, but it's actually WXY. It's a combination. We are not here for appearing for an exam to be. We just need to understand the corrective wave pattern, and it's okay to label an ABC for simplicity's sake. And the important thing that we need to note here is pound has bounced right from the Fibonacci 38.2%. It didn't even go to 38.2% exactly. It bounced right before that. All right. So having said that, the larger degree trend is firmly on the north side with a neat little expanded flat or running flat structure. It's a WXY combination. Okay, we've got Mr. Sanjay joining us. Welcome, Mr. Sanjay. We are doing the fourth analysis of the session after euro, dollar index, gold, and this is the pound. Uh, no problem, sir. It is just to remind you, our timings are 4 p.m. Dubai, just in case you would want to note down. But it's okay. These sessions are recorded. They will be there in the YouTube video as well, and I will review quickly before leaving as well. So don't worry at all. Uh, Once again, thank you everyone for those who are all joining from live from YouTube as well. If you do have any questions, feel free to type in. I always keep toggling the screens here, but if I'm not able to answer, I will definitely do so after the session is done. So pound long-term story is on the north side. And also I would be giving all the webinar links around the end of the session. So please stay here. Uh, would want to welcome you all on the all four webinars, Tuesday, Wednesday, Thursday, and Friday. Now the action is right on the hourly chart, and believe it or not, it is fiercely competent and way more competent than what we have seen on the euro and the dollar index charts. And just give me a moment, please. I would quickly do the impulse structure on pound, and that is so beautifully done. It's not only at one wave, it's a minute impulse complete, followed by a minute corrective. Sorry, I'm just trying to do it a bit quicker. That is minute wave ABC correction. All these will be discussed in the theory sessions as well, which we conduct every Tuesday, 4 p.m. Dubai time. It's just 1 week. Oh, sorry, it is minute. And let me do a trend line quickly here. And you would see that wave one of minute degree and wave two of minute degree is in place. But not only that, we are now beginning to see that wave three is expanding beautifully. And wave three is expanding, but the third wave is an extension itself. Can you count five waves here, gentlemen? One, two, three, four, and five. That is the third wave extension in itself. So we are going to that bracket three should be somewhere here. There is a subdivision. Third wave is extended. So we are going to see a wave four corrective decline sometime soon. I'm not sure whether it's going to come right now or sometime later. But the fifth wave is well poised to go towards the 2800 mark. All right, and the strength is quite higher than what we are seeing in the euro and the dollar index. I'm not saying that they are not good enough to trade or potentially position in euro and dollar index, but pound is fiercely in control of bulls, and those are the first targets up on your screens. It has already hit the first one around 2672. The second one is just around the corner around the 28 mark. And above that, we are having 1.3 and 1.33 flashing on your 4-hour chart here. 1.3, 1.31. All right. So we already we were quite. I would not use the word lucky, but we actually got the first one around the 20 to 50, 60 zone, and we got the second one right at 1.2350 here in one of the live sessions. I'm not saying that the price will come back, but if you're inclined and poised towards any position building in pound, then partial now remaining around 2450 is definitely on cards. All right. So the fourth high potential trade setup, third high potential, sorry, gold is a bit aggressive. Is for pound is partial around current price 1.2645 and remaining 1.2450. You could also be bought around 1.2400. Please. Only recommendation is don't place the stop loss according to our will. I've seen traders placing stop loss in a very near support and then they get stopped out unnecessarily, despite the fact that the trend has been identified correctly. Now, if this is wave two identification correctly done, then 20 to 50 is very safe as a stop loss. Ideally, prices should not go below 20 to 50. I would recommend personally when I give out trade signals, it's around the 2100 mark. And the target, it's not an intraday, it's not weekly, it's multi-week, ideally multi-months. But tell you what it looks like, March is going to be a very good one for, I think next week we should be having some kind of a pullback for us to give us an opportunity to go long again. But March should be fiercely around the 2800s, 1.3 and 1.33 as well. All right. Ideally, if you keep the bigger picture in mind, which is clearly pointing towards that high, which is that high 3400, right? 3300, September. September 2024 highs. The bulls will be actually targeting September 2024 highs. We are in the process, I mean, the bulls in pound, euro, and the dollar index, all three of them, they are in process to carve minute wave two of a minute degree. And I think pound has already done that around 2250. Euro and dollar might do that next week, but pound has almost completed that. All right, so that's the trade setup number 4 for the session. And I would like to pick up, as I always like to do, there's another good opportunity that we are seeing in Bitcoin. So just a just a couple of more minutes, please. It's not going to take much time. I've already done the counts for us, and this was discussed on Wednesday. And price action on Wednesday was somewhere around this price. That is 18th or 19th of February. It was around the 95,000 mark. And today we are almost 99, which is the first target. Now, the thing we need to understand here, why the recommendation was given on the buy side potentially was that this minute degree wave 4 possibly terminated as a triangle. And uh-oh, I took the wrong one. You need to take the triangle. So please excuse me. And that's why I like this Elliott wave plotting being made available here. Otherwise, if you start plotting on your own, it takes around a hell lot of time. Okay, so wave 4 terminated right around the 90, 91, 93 lows, and the first impulse is in place already. So 3,000 points, this guy has already moved up. All right. If you're wanting to re-enter, then the next price action is as follows. That is the range. 90, 96, 900 is the top range, and 95, 500 is the bottom range. Stop loss can be placed just below the 93 mark. Ideally, I suggested 89 last time, but it's okay if you place 93 right now. The first resistance is also being taken out. So the next move in pound is ideally on the north side with slight decline and then a rally. All right, and if we do the extensions right now, it should be pointing right across 104. It's already 102 and 108 on the upside. All right, so the fifth potential trade setup is in Bitcoin. It's a limit order around the range 95 500 and 96 900. Uh-oh, I got an 8 in between. 96 900. Stop. Recommended stop goes below 93, so let's put it 92. And the target potential remains 102K and 108K going forward. All right, sir. So that is the fourth high potential trade setup and fifth for the day for the session. All right. So with that note, I would like to bring the current session to a pause. If you do have any recommendation or analysis to be done, you might want to type in, and we can take that as well. Anyone from those who are joining in the YouTube, if you do have any questions, please type in. I've toggled the screen here. And if you don't have, I would like to humbly thank you, everyone, including those who are joining from YouTube and the Zoom sessions. I would like to also paste the webinar links to Mr. Sanjay, Mr. Romal, Mr. Lvin. Please hang in there. I'm pasting the webinar links. Specifically, you would be interested in the Tuesday English sessions where the Elliott wave theory is being started next Wednesday, Tuesday. But I'm pasting all the links here, all four webinar links. Please feel free to register. It only requires one registration. And once again, I'm reminding that these live sessions, English, Mr. Taha has joined us. Mr. Taha, welcome. I'm going to take a moment for you and Mr. Sanjay to review all the analysis that we have done since you are here. Humble thank you. But before that, I would also post a YouTube playlist where all the videos go in the past as well. Just a small announcement, these live sessions are going to go across 2025. You need to register only once. All 50 sessions or 45 sessions, uh, not a problem at all, not a problem at all. I can understand, we are all busy. It's so good to see you at least coming, at, even if it's late. This is the email address as well, harsh.jappi@gtcfx.com. Anytime, please feel free to write to me, and I will take just a few moments to analyze or just review what we have done for Mr. Sanjay and Mr. Taha, and others are also welcome to join us. BTC is a buy signal potentially from 95,500 to 96,900. It's a typo here, it's not 95,900, 96,900. Potential stop loss around 93 and upside targets around 102 and 108K. Euro USD potential trade setups are as follows. Partial longs were recommended around partial long around 1.0460, potential partial longs remaining around 1.3, 1.460 and 350, 100 points difference. Stop loss recommended 1.0150 and potential targets 750 and 1100. These sessions are already being recorded, but I'm wanting to give you a chance to note down just in case there's a delay in the upload. US dollar index trade recommendation, or on the south side, please. Potential partial shorts around 106.40, remaining around 107, 108. The provider should be capital.com. If you are trading with some other provider, kindly look into some price fluctuation. There's a change in prices. Recommended stop for any provider would be 110, and potential targets are flashing towards 104.50 and 101. And gold analysis, we spent quite a long time, and those are the larger degree counts explained. Let me bring up the daily chart. So the larger degree story is up on your screens, Mr. Taha. We have wave 1, 2, wave 3 complete. We are potentially expecting an ABC complex expanded flat corrective structure, but we are still waiting for the price confirmation. It is a slight aggressive trade, but if this trade goes through well, we would also have a price confirmation that wave B is complete and a 5-wave decline towards wave C is now resumed. And that is potential sell aggressively, potential sell around 29, 33, 38. The stop recommendation around 2957. It could possibly push through 2962 as well, but we are not placing stop loss there. We're going to keep it tight since it's aggressive. And downside targets are 2905, 2875, sir. And the last one before you came in was pound. I think it was Saxo Bank. Yes. And it is a potential partially buy around 26.45 right now and remaining around. Give it some space, please. Don't buy everything ideally at one price. So potential longs are active We are already active, but fresh trades can be taken accordingly. 2450, 2400. Strict stop loss should go at least around 2250. Recommendation is 2100. And the upsides are as follows: 2800, 3000, 3100, and 3300 and higher. All right. So those are the quick trade setups that we just discussed today. And I've given you all the registration links for English Hindi webinars. 4 webinars a week we are taking. Live sessions are going to go through December. Educational sessions will be kept on increasing, and eventually we plan to convert them into live sessions as well. So going down the line, we might be having eventually 4 live sessions a week if the demand is there. Once again, thank you everyone for taking the time to join in, and a humble thank you everyone who have joined us from YouTube Live as well. We will see you all next Tuesday for the English theory session, and Wednesday for Hindi Live. No problems, Romel. I want to humbly thank you guys to taking the time and making it here. It's only because of you that we are able to do this. Thank you once again. And I also want to thank Shukla ji, Mohammad Bhai, uh, as always, Shukla ji, thank you. Mr. Chocho, Lin, thank you so much. Sanjay ji, thank you. Taha, Mr. Taha, thank you so much. Shukla ji, always, thank you. Romil has left. Have a nice week. Thanks again. Okay, Romil is here. Thank you. You have a nice weekend, blessed one. Romil, thank you so much. Thank you, sir. Shukla ji. Thank you, Tolani sir. Hope to see you next session as well. Please feel free to write to me if you have any questions at harsh.japit@gtcfx.com. It could be anything technical, charts, or any questions. The next session in English theory is on Tuesday, 4 p.m. Dubai time. Hope to see you then. Until that time, goodbye and take care and God bless and have a blessed weekend, everyone. Thank you. Thank you, Mr. Chocho. Hope to see you next Tuesday in the English theory. I'm not able to speak Chinese, but thank you so much for being here. God bless you.